flipping across the U.S. is at its highest level in more than 20 years.
And while investors are taking advantage of a white-hot market, home buyers are feeling the pinch. Chief correspondent at Axios, Jennifer Kingson, joins us now to discuss this. Hi there, Jennifer. So give us a sense of how much more popular house flipping has become in, say, the past 5 years or so.
There's been an absolute epidemic of house flipping in the U.S. over the past several years, and it culminated in the first 3 months of this year when a whopping 10% of real estate sales represented flips. That's the highest level since the year 2000, and it's double what it was a year ago in the first 3 months of 2021. What is a flip? A flip is when a house is bought and sold twice the same year by people who don't know each other. And in some communities, it's so epidemic that the rate is 19% or so. Hot markets like Phoenix, Charlotte, North Carolina, Tucson, Arizona. The trend speaks in part to the pandemic real estate market, where people are trading up for bigger and better homes. But a really bigger thing is going on here. 2/3 of these flip sales are in all cash, which points to the fact that it's institutional investors like private equity firms and pension funds that are scooping up these homes in the fix and flip trend and turning home buying really into an expensive blood sport.
Interesting. It's interesting to hear that these aren't individuals and that these are companies buying up a lot of these houses. So I'm curious, because you said there are so many people flipping houses on the markets right now. On the housing market right now, do those house flippers have an actual impact on the market because of their numbers?
There's a big debate over whether home flipping has a deleterious effect on the market, particularly for first-time buyers. People in the real estate industry will tell you that the institutional buyers with their deep pockets are primarily purchasing distressed properties that mom and pop folks wouldn't touch or couldn't afford to buy anyway, and restoring them to the market. But housing advocates will tell you that those same institutional buyers are the villains in this story, that they're competing with ordinary Americans and driving up home prices everywhere, which, as we all know, have been skyrocketing anyway during the pandemic.
They really have been, yeah. And I wonder, Jennifer, how is the rising mortgage rate going to impact the market? How does that factor in here?
Rising mortgage rates are starting to put a big damper on the home flipping market, for one thing. We've already seen that in the profit margins. The first 3 months of this year, where there were 10% of the market were flipped, those flippers earned an average of profit margins of 26% on the homes they bought, which sounds pretty great, except when you consider that a year ago that figure was in the 40% range. And the rising mortgage rates are considered a prime factor there. Going forward, people are more likely to stay put in their homes if they can't get a good price for financing. People don't want to trade a 3% mortgage rate for a 6% rate, for example, which may mean that they won't put their house up for sale. There'll be less inventory on the market and fewer homes to buy and or flip.
You know, Jennifer, really quickly, before we let you go, I'm curious, you say that the flipping happens really quickly. Obviously, that's, to the benefit of the person selling to the new person. But say you're a buyer and you can look at the history of the home that you're interested in and you see that it's been bought by a flipper. Doesn't that turn you off of that property because you think, hey, you know what, somebody just bought this property a few months ago for far less?
Well, buyers' options are pretty limited these days, particularly in those hot markets. If you're really eager to move, that may or may not be an important factor.
Interesting.
Yeah.
All right. Well, thank you so much, Jennifer Kingson, for your insight into the housing market. We appreciate it.
Thank you.